A lot of veterans miss out on thousands when using their VA home loan benefit, and it often stems from having a poor plan or having the wrong real estate team and lending service to help them go through the VA loan process. So, in this video, I have provided you with a complete checklist and breakdown of everything that you're going to need to follow and know about to avoid making a very costly mistake. If you're new to the channel, this is a channel created to educate veterans about the VA home loan benefit completely free. And me and my team get called every single day from veterans just like you who are trying to navigate the VA loan process. So if you find yourself stuck or you just want to get help from a team of individuals that you can trust to specialize in the VA home loan benefit, give us a call or shoot us a text. We're happy to help. Lastly, before I jump into the video, I have made sure to give you guys chapters to this entire video so that you can jump around to different things or just simply resort back to this video because this is a little bit of a longer video that we are making. And I just want to make it as simple as I possibly can for you guys to get what you're looking for, depending on which step that you need more information about. So check out those chapters down below. Okay, so let's bring up our checklist and get started with the first and most important thing that I want you to do when you begin your VA loan journey. And that's pulling your certificate of eligibility. This is extremely important because the certificate of eligibility determines who's even able to use the VA home loan to begin with. Now, there's a few ways that you can actually do this. One of the ways is you can send in a form to the VA by mailing it into them, and they will send you a copy. This can take days and weeks, even sometimes months before you actually will receive it, and definitely not the one I recommend you doing. The other option is you can actually go online to eBenefits and try to pull it yourself, and typically you will receive that within, I would say, about 3 to 5 business days. The quickest way to get your certificate is by working with a VA knowledgeable lender, which I'll talk about a little bit more later, but this is something that we're able to pull through the automated system. In some cases, though, probably about 7 out of 10 times, it will come up in the automated system. The other 3, it just depends on maybe what the VA records are showing. It has nothing to do with the lender. It's everything to do with the VA. And sometimes the VA is going to request additional information that is pertaining to your time of service. It could be things like a point statement, a DD-214, NGB 22 or 23, and among other different forms that could be dependent upon which branch of service that you were in to be able to provide to the VA so that they'll give you the COE. If you do not have a COE or have it already in the file, no matter how far along you are in the home buying process, you will not be able to close on a VA loan until that certificate eligibility is attached or associated with that file, which this could be a huge hurdle or speed bump in your transaction that I want you guys to keep in mind of. The very next thing that I want you to do is get connected with a VA lender, and not just somebody who does loans, a VA knowledgeable lender who specializes in doing VA loans. This is extremely important because there are literally dozens to even hundreds of different loan products out there. And all of these different loans have different rules and guidelines associated with them that are constantly changing. It is literally impossible to be an expert or a specialist in every single loan. And I always find it somewhat comical when I do run across lenders that I meet in the industry who talk about how they specialize in everything. And as we all have heard in the old cliche saying, a jack of all trades is a master of none. And this poses true in this industry as well. Because these guidelines are constantly changing, it's impossible to keep up with all these changes unless you are specializing in 1 to maybe 2 at most to really know what's going on and where to look and keep a better feel for what's possibly changing and what's even possible when it comes to doing these different types of loans. Me and my team specialize in doing VA loans. This is literally all we do. And this is why this channel exists, is not because I wanted to speak to the veteran community as a source for doing all types of loans, but it's because this is all we do. So if you want help working with a VA loan specialist who will guide you through the VA loan process, no matter how you're trying to use it, whether that's purchasing or refinancing, you can reach out to us because we have the ability to walk you through the entire VA loan process, no matter where you're at in your home buying journey, whether this is your first time, second, third, or you're maybe wanting to build your dream home, we can take care of you in this process. When working with your VA loan specialist, the next thing you're going to want to do is submit your documents. And the reason I have put submit preliminary documents is because a lot of lenders only do pre-qualifications. They don't do pre-approvals. And here's a big difference. Pre-qualification is you only submitting documents, or excuse me, an application and a credit report. So what'll happen is you'll submit an application, they'll do a credit pull and just go off of what you state on the application. This does not guarantee or confirm anything, which means that there could be potentially a lot of time wasted. The last thing you want to do is have a pre-qualification done, have probably about a 50% success rate, and then go looking for a house that could take you weeks or months to find, but then only to find out maybe later down the road that there was something going on with your situation that was not found during the pre-qualification, and now you no longer qualify. If I was in your situation, I know I would be frustrated, and that's why me and my team don't do pre-qualifications. We do pre-approvals, which means that we want you to not only do the application, allow us to look at your credit, but also provide the supporting documents to your situation. This could be things like tax returns, W-2s, pay stubs, bank statements. Depending on what else is going on in your situation, there could be other documents that we would need to be able to verify this information, which now takes that pre-qualification of a 50% success rate to a pre-approval where you're going to be more in the 90 plus percentile rate. Now, obviously things can go wrong in any transaction, and anyone telling you otherwise is really telling you, I would say, not telling the whole truth there, but pre-approvals aren't necessarily guaranteed, but they're pretty darn close. This is going to be getting you much closer to being able to be guaranteed to get what you are looking for with your VA home loan benefit. The next thing that you're going to want to do once you have gotten pre-approved is you want to finalize that pre-approval by going over monthly payment goals. You see, a lot of times people find out what they're pre-approved at, but they don't really understand what this monthly payment may look like with this pre-approval amount. Personally, what I like to focus on is the monthly payment goal. So when someone tells me they want to be pre-approved for a certain amount, let's just say $500,000, my follow-up question to that is, what's your monthly payment goal? How much do you want to pay every single month on your mortgage that fits your overall lifestyle and your comfort zone? The reason for this is because what someone may want their payment to be may not actually equal to what they're intending to spend or search for on the market. And it's not their fault. They don't really know exactly what that may equate to because they're only going off of websites like Zillow and Redfin and other websites like that, where they don't give you a full understanding of what an accurate monthly payment looks like. So when we finalize your pre-approval, we try to make sure that you have a strong understanding of what the monthly payment will look like based on how much house that you are trying to purchase. The other things that we try to go over is just the overall goals for home ownership. How long you plan on living in this particular home, whether you want to consider renting that house out at some point in the future. The other things that we try to discuss with you are trying to make sure you do not make any drastic changes to your financial situation or your credit. What you definitely do not want to do is go quitting your job or have a midlife crisis or go buying things on your credit that now could affect your pre-approval amount. This can drastically change things, and it's something that you most definitely want to make sure that you avoid. The next thing that we're going to do in this entire process is get you connected with a VA knowledgeable real estate agent. This is extremely important because there are things that go along with purchasing a property with your VA loan called minimum property requirements. And you want to be connected with a real estate agent that has a strong understanding of what those requirements are. They are somebody that is going to save you a lot of time in the long run during your home buying journey, because what you don't want to do is go looking at property that does not meet those minimum property requirements. That's a lot of wasted time and effort that should be avoided. The other thing is they're going to be there to provide experience from past veterans that they have worked with and that they've helped. I would highly advise you to ask them how many veterans that they've helped use the VA home loan benefit. Ask them about their availability for when they can help you go see property. Ask them about their negotiation style and how they see the market currently being where you are looking to purchase and buy. And then also ask them what's roughly the timeline in regards to what it will look like for when you are pre-approved all the way to when you could expect to close on that property. These are all important things that you would want to have a better idea of, because every market, when it comes to a geographic area, like I'm in San Antonio versus someone that may be in Seattle, we could be looking at roughly different potential timelines for a transaction, different potential negotiation strategies, and all of these things. So these are very important things that you want to have a good understanding of, because they don't always translate across different areas. Some, don't get me wrong, but some areas have a little bit more of its own uniqueness to it that you would want to know more about. And you will only know that by working with a not only a knowledgeable real estate agent, but as I mentioned, a VA knowledgeable real estate agent. The next thing that I want you to do is to create what I call a short list. And this is where you're going to come up with your needs and wants for the property that you are looking at buying. Some of those needs are going to be the things that are non-negotiable, like what you expect this house to have no matter what, or else you're just not going to consider it. For example, it could be maybe the bedroom and bathroom count that you're looking for, or the location. I would even consider things like your commute to work, if that's what you are doing, unless you work from home. Schools, other essentials like stores and hospitals are things that you could say are going to be possibly needs or higher on your list. The other side of this list is going to be your wants. And these are going to be more feature specific, and they're also going to be a little bit less crucial. So this could be for things like maybe the kitchen size versus maybe the overall what the kitchen has per se. It could be for things like a pool or your yard. But really, these are going to be things that don't necessarily affect your lifestyle in a negative way. They're more of what I call lifestyle enhancers. So those are going to be the wants. But what I would tell you to do once you have come up with this needs and wants list is to review it and prioritize each thing on both sides, right? List off in order what are the most important needs that you have and what are the most important wants. And I would rank them and provide yourself with a little bit better understanding that you maybe need to be a little bit more flexible because maybe what you're looking at getting out of this house maybe not fits your budget. And the best way to know that is by, once you finish that list, presenting it to your realtor, not showing it to your realtor before or not showing it to your realtor while you're working on it. Do it after, because you want to come up with everything that you expect first and then talk to your realtor and ask for their professional opinion. This will allow you to have a little bit more free flowing of creativity and ideas, and then allow you to be open to possible changes or corrections that need to be made, which means be open to make certain compromises on your wants list. And once you have gotten this all squared away, the next thing I would tell you to do is set up maybe every few weeks or even every month to possibly review and revise that depending on how long your search is going. Because as I mentioned a minute ago, depending on what you're expecting out of this property, it may not always be the most realistic thing based on maybe your geographic area or even based on the market. So knowing what you're expecting or what you're looking for, and then knowing what the market actually provides are two completely different things. And the best way to do that is by having the list and then presenting it to your realtor to ask for their professional opinion. Now that you have your needs and wants list, the next thing it's time to do is to find a home and get an offer accepted. And what happens during this time is, one, when finding a home, it's going to be using that needs and wants list, or that short list, as I call it, to help you find the properties that you're looking for. What I would tell you to look for once you're actually in the home is going to be based on a couple of different things. The first one is going to be condition, the systems like the HVAC and the AC or heating system, the safety of the property, meaning what's going on in the neighborhood and location. What's the potential for the property's future? What are the HOA rules if the property is in an HOA? Get a feel for it. If that's something you can see yourself living in, if it's just you, that's just your own consideration. But if it's you and your family, think about how it's going to affect everyone that's living there. Get an idea of what that payment looks like and how it affects your finances. And then find out what the seller is disclosing based on the listing as well, because those are all important things to consider when finding that property. If you found the property based on all of those things that I mentioned, then the next thing it's time to do is to make an offer. And that's where you and your real estate agent are going to sit down, go over comparables in that area, and be able to figure out what is a fair offer to be able to provide to the seller to hopefully allow you to win that offer, which would lead to you getting your offer accepted. Once your offer has been accepted, the next thing it's time to do is to update your loan details. And this is because depending on how long it took for you to find your home, you will have to have certain documents be updated. And this is going to be for typically things like your pay stubs or bank statements, and really just making sure nothing has changed. And the reason for that is because Pay stubs and bank statements typically last every couple of weeks or month, depending on obviously which one it is. Like pay stubs, if you're paid biweekly, then obviously it's going to be every couple of weeks. If you're paid weekly, then it's going to be each week in there. If you're paid monthly, then it's just that one statement. But if you've been looking for a house for 1 to 2 months, that's why you would be needing to update several of those documents. But it's not as much that as to what you may think you're needing to update. And that's because you would have provided quite a bit of information already at the pre-approval process. But just be prepared to need to update those documents there. The next thing is going to be sending your earnest money deposit to the escrow company. And an earnest money deposit is a promise to perform your end of the bargain. This is you pretty much having skin in the game and showing the seller that you're serious. It's not a expense or a per se like a closing cost. It's simply a deposit that gets held in escrow until the completion of the transaction, which means that an earnest money deposit is still your money. And typically an earnest money deposit could be anywhere between $1,000, like a flat number, or it could even be up to 1%. I've seen it be of whatever your sales price is. So if you're doing 1% of your sales price and you're buying a $300,000 property, then your 1% earnest money would be $3,000. But this does vary. It just really depends on maybe what the seller will accept to get your offer accepted there. Again, the reason you're doing this is simply to show the seller that you're serious and that you're also not going to back out wrongfully from the transaction. And this also tells the seller like, hey, if I do back out wrongfully or do anything like that in our transaction, the seller can then keep that money. If you don't back out wrongfully or terminate against the contract, then you can get that money back. The other thing is if you move forward with the transaction all the way to closing, then your earnest money deposit is something that can go towards the overall purchase, which I'll talk a little bit more about later in a future step. The next thing that you're going to do in this process is you're going to lock in your interest rate. And this is an extremely important step that I want to go over with you guys because there are a lot of myths and misconceptions around locking your interest rate that a lot of people actually don't really understand. You see, a lot of people think that your interest rate is determined when you're at the pre-approval stage, which is all the way up at step number 3 and 4. But really, your interest rate is not locked in until you're under contract. So if you're working with somebody that is telling you your interest rate is this number over here, and you haven't even found a house or are under contract, I have news for you. That rate is not guaranteed, which means the market can and is constantly changing every single day. And potentially you could find yourself with a higher or hopefully a lower interest rate than what you were quoted. What you don't want to do is focus so much on what the rate is when you are pre-approved. You want to focus on that after you've gone under contract, because that's when you can actually get that rate locked in by whomever particular VA knowledgeable lender you are working with. Your interest rate is typically locked in for a set period of time. For example, it usually works in 15-day increments. So you could be looking at a rate lock between 15 days, 30 days, 45 days, or as high as 60 days. The date or the amount of days that your rate is going to be locked in for is depending on your contract. So if you're in a 30-day contract, you want to make sure that you are using at least a 30-day lock. This is simply because if your rate lock actually expires before your loan closes, you could run into rate lock extensions, which means that it's going to be an added amount on top of whatever your closing costs are to be able to close. And the longer that extension is, the more costly it could be. What we focus on in our team is mainly making sure that your rate is locked in through your closing date to avoid any potential surprises or unnecessary fees that you don't need to pay. Now, granted, this doesn't always guarantee that because there could be potential speed bumps that happen in the transaction. But what we always want to do is err on the side of communication and caution and be able to let you know how certain things affect what your rate lock will look like. What happens when you are locking your rate is you're also going to look at what's going on in the current market. If interest rates are trending upwards, it's best to lock earlier rather than later in your real estate transaction. And this is because what you don't want to have happen is rates continuing to fluctuate or continuing to rise, and you could have been locked in before that rise actually completed. On the flip side, if rates are trending downwards, it could be better off locking a little bit later in your transaction. All of these things are very market specific, And the best way to know exactly what you should do in your situation is also based on trends and based on long-term goals. If your long-term goal is to rent out the property, or maybe sell the house in a short period of time, or maybe to refinance in a short amount of time because the market is supporting an opportunity to refinance. All these things are what I would tell you things you need to consider when you were going through what you are going to lock your rate at. What I would highly advise you against is talking or working with somebody that is solely just focusing on how to get you the lowest rate, because the lowest rate could equal the most amount of cost. And if that does not add up with your goal, you could actually find yourself paying way more for something that costs you more in the long run and actually does not help your overall situation. A VA knowledgeable lender that has your best interest in mind is going to be there to go over specific details as to what makes the most sense for your long-term goals to help you avoid making a very costly mistake. The next thing that you're going to do during your contract phase is going to be having a home inspection done. And a home inspection is often confused with an appraisal, which we'll talk a little bit more about later. A home inspection is there to be able to give you more confidence in making sure that what you are buying is actually what is listed and there aren't going to be any surprises. So they're going to review things like the structural integrity of the property. They're going to look at the roof, the plumbing, the electrical system, the heating and cooling system, appliances. They're going to check also for any potential water damage, mold or mildew. They're going to check the insulation, make sure there aren't any safety hazards, and also any possible environmental concerns. This is a very detailed inspection that takes place, and the person that does this inspection is actually an independent contractor that you choose. So they're there to work for you. They don't work for anyone else in the transaction. They are there to represent you. And a lot of home inspections are done over the course of several hours. So they're there at the property, literally looking for anything that could be wrong. And a lot of times they usually do find it. I bought a property that was literally 6 months old. And when we had a home inspection done, our inspector was there for a little over 3 hours and they found 9 things wrong. Now, granted, those 9 things weren't major things that were actually wrong. They were actually very minimal things. But the reason I'm sharing this with you was because the 9 things that they found, only one of those 9 things we were able to see with our naked eye when we had actually went and toured the property, which means that they found 8 more things on top of the one thing that we were able to find there. So I share that with you guys because a lot of people think that home inspections are only needed to be done on older homes. But I'm here to tell you right now, home inspections are needing to be done on any home that you buy, whether you are buying a brand new home that is built by a builder or a home that has been built for 20 plus years. Always get a home inspection done because this could potentially save you from costing yourself a thousands of dollar mistake in the long run. Once your home inspection has been completed, the next thing that you're going to be able to do is take that report and review it with your real estate agent to check to see if you need to now negotiate any potential repairs. This is a specific phase where you're going to review those possible repairs that need to be done and decide whether or not you want to request those repairs to be done by the seller before closing. Maybe you want to request to have a credit from the seller for whatever the amount those particular things could cost, and then you do them yourself. And in other situations, you could even use it as a tactic to be able to renegotiate the price. All of those things are very specific to each situation, so it's hard to say what is the best route for you to do, but working with a really strong and knowledgeable real estate agent is going to be the best thing for you to know exactly which route to go. Because in this situation, you could also walk away from the deal. For example, maybe when I found those 9 things wrong with our property, we went back to the seller and said we want them all to be fixed and by the seller, and we weren't going to fix any of them. The seller has the right to respond to our request and say, no, we don't want to fix any of them. You can buy it as is, take it or leave it. And then now the ball is back in our court to decide if we want to maybe counter whatever that offer was again, or just decide to walk away, cancel our transaction, get our earnest money back, and go search for another property. So these are all things that are going to be, again, specific to each particular situation to decide whether or not what is the best route for you to go. So do you remember back at step number 8 when I told you to update your loan details? Once you have updated those things, what the team is actually going to do is submit your loan to the underwriter to do what's called a conditional loan approval. And that process is typically done when you have done everything to be updated. So now you have received the conditional loan approval, which means the underwriter has reviewed those items and come back with a decision as to whether there maybe is other items that they need or expect from you to be able to successfully close on your transaction. This could be maybe verifying something that wasn't clearly detailed on the application. It could be providing a letter of explanation for a particular maybe monthly liability that you have going on. It could be requesting homeowners insurance that you're going to choose for your new property. There's a multitude of different potential conditions that could be on that conditional loan approval letter. But essentially what this is the initial review that the underwriter has done. And basically what they're saying here is we're going to approve to close this loan as long as you provide these said conditions. So once you have provided those conditions, they're going to take them and submit them to the underwriter to be able to clear them as well. The next thing in this process is going to be your appraisal. You remember I told you that an appraisal and a home inspection are often confused? The difference here is the appraisal is only there to determine value. When you order a VA appraisal, what we have to do is we request it from the VA portal, and then the appraiser gets assigned to do the actual appraisal. This is an uninterested party, whereas when I shared earlier with the home inspector, that is a person that works for you. An appraisal or appraiser does not work for anyone other than the VA. Now, they don't work for the VA as an employee. They're an independent contractor as well. But again, they are an uninterested party. So they do not work for your lender. They don't work for the title company. They don't work for your buyer's agent, the seller's agent, anyone in the transaction. They are independent and they are approved by the VA to be able to do a VA appraisal. So the appraiser gets assigned, and then what they're going to do is do a visit of the property. They're going to check for things like the condition, the size, the layout, and any features. And they also take photos and notes to provide on their report. They also do a comparative market analysis that allows them to research recent sales in the area of similar properties. Once they do all of those things, they're going to provide a report to your lender where they're going to give you what they feel this property is actually going to be worth. Now, there's a couple things that happen here. Your lender is going to review that appraisal, and then what they're going to do is also present you with a copy. Some things that could happen here is, let's say it comes back at whatever your agreed asking price is. For example, if you're purchasing a property for $400,000 and the appraisal comes back at $400,000, then perfect. Everyone's happy. We continue to move forward with the process. What if it comes back at $410,000 and you're agreeing to purchase at $400,000? Well, congratulations. You now have equity. Or as my friend Adam would say, you not only bought a house that is for sale, but you also bought a house that is on sale. We don't have to go to the seller with any of that information. That is 100% private information that we only share with you and your agent. But the seller's agent does not find out about if an appraisal comes back over what the agreed purchase price is. So that's great news. But even if it comes back at value, it's also great news as well. But what if it comes back below? What if that $400,000 purchase price gives an appraisal of $390,000, $10,000 below what our purchase price is? What happens? Well, what has to happen in this situation is a few different possible routes. The first route is, let's say it comes back at $390,000 and we can now go back to the seller and renegotiate because it came back below what we agreed to. So we go back to the seller and we say, hey, the appraisal came back at $390,000. We present them with proof in that situation only. And then we tell the seller, we're going to now make an offer at $390,000. We still want to buy this house, but we can only buy it for what it's worth. So we're offering $390,000. There's a few situations that can come of this. The seller can decide that they're going to accept that lower offer based on the appraised value, or they could be a little bit more playing hardball and say, you know what, if you want to buy my house, well, meet me in the middle. I've even seen situations like this where the seller will tell you, you know what, I'm not going to drop it all the way to $390,000, but I'll drop to $395,000. And then you just need to come in with a $5,000 down payment. I've seen that happen too. Either way, whatever the seller comes back at, if it's anything other than dropping the price to $390,000, you can continue to renegotiate, and you can also decide if you want to walk away yourself. So you're not obligated to buy this house for anything more than it's appraised at. The other thing that could happen is the seller maybe says, you know what, I really feel like the house was worth 400,000. This appraisal has to be wrong. There could be some truth there. And the cool thing about a VA appraisal compared to any other type of loan, conventional, FHA, and USDA, is VA appraisals actually can be what's called reconsidered. The VA will allow you to do what's called a reconsideration of value, which is where you provide a letter to your lender and to the VA and provide comps to support why you agreed to the purchase price that you did. And then they will present that to the appraiser, and the VA will give the appraiser an opportunity to change their valuation. If the appraiser changes their valuation, great. Maybe they bump it all the way up to 400,000. If they don't change their valuation, the VA can step in, do their own review, and decide whether they want to support the appraiser's decision or whether they want to support your decision. But what's really cool about the reconsideration of value is I've seen this be the biggest saver of a deal or a real estate transaction, because any other type of loan, a lot of times these situations can kill the overall transaction, thus making the seller have to put their house back on the market and the buyer to have to continue their home search. So a reconsideration of value is a very powerful thing to have in your back pocket if it's something that's needed. The last step in all of this is going to be CTC, or final loan approval. This is where the lender does a final review of your financial information, the appraisal, and any other relevant documents pertaining to your situation to make sure that it meets the requirements. What will also happen here is you're going to receive a closing disclosure, which usually comes 3 days or 3 business days prior to closing. And this document will outline the final terms of your loan, including the loan amount, the interest rate, the purchase price, any closing costs, or any other fees that are associated with being able to buy this property. If you do have closing costs that are associated with buying this property, then the next thing you're going to need to do is wire those funds to escrow. You don't wire or give a check to anyone else but the escrow company, which means that you're going to want to get the wiring instructions from the escrow officer themselves. Sometimes I, as a lender, get calls from my clients asking me, hey, can you give me the wiring instructions? And I, even though could possibly request that information for them, I refuse to do it solely because there's a lot of fraud out there. And what I don't want is to have that tied to us. And I do that to protect you, which means that I will point you in the direction of who to contact at the escrow company. And that's really it. And you just want to verify that wire instructions with the escrow officer to make sure everything is right. Wiring those funds is important because then that makes sure there isn't going to be any potential delays in funding your loan later on when it comes time to actually be able to get the keys to your property. After this, the next thing that we're going to do is your final walkthrough. Your final walkthrough is where you're going to go back and take a look at the property one last time before you become the homeowner. And you're going to do that with your real estate agent. You're going to check for any possible repairs that needed to be made when you found it on your home inspection to make sure that those have actually been completed. You're going to do another review of the overall condition of the property, check on the utilities, the HVAC system, the plumbing, the roof and attic. I would double check windows and doors, flooring, walls and ceilings, exterior, landscape, really just going through everything that you can to make sure nothing has changed and that what you are buying is exactly what was agreed upon in your transaction. The next thing that you're going to do is you're going to have a pretty exciting time. This is your signing. This is where you're going to sign the loan documents to show that you are going to be the actual owner of this home that you have been working to find and buy. This is the finalization of all the loan paperwork. And depending on where you are buying, this can happen on different days than you actually get your keys. For example, I used to live in Hawaii, and Hawaii has a 4-day closing timeline. It is absolutely crazy, which means that the day that you actually sign on the loan is not the day that you get your keys. That 4-day closing process looks something like this. On day 1, let's say that's Monday, you sign on the dotted line for this property. On day 2, which is Tuesday, your loan is now going to fund, which means that all the money that you borrowed on that property gets dispersed to the necessary parties. Day 3 is a like a skipping day. There's nothing that happens on that third day, which is crazy. And then day 4 is the recording day, which means that it is going to be recorded with the city and county that you are the owner of that particular property. Again, it is a 4-day closing process, but Texas is completely different. Signing, funding, and recording all happens on the same day here in Texas. So keep in mind, if you are in a state maybe like Hawaii or similar to where it doesn't always happen on the same day, it doesn't mean something is wrong. It just means that is how it works in your particular area. Not all days or not all places have a 4-day process. Some are a couple of days, but it really just depends on where you're located and how things are done in that particular market. But again, either way, it's an exciting time in anyone's life. The next thing that you're going to do is you are going to want to make sure that you update your utilities. This is going to be switching over things like your electricity and your water, because you want to make sure that there isn't going to possibly be any outages when you actually do decide to start moving into your property. And this is often a very common mistake that people actually do make when they are going through the buying process. And it's understandable. It's because they're excited to move into their new home and they forget to get those things updated. The next thing is, if you are buying in a property in an HOA or a homeowners association, you want to make sure that you get this payment set up as well, because your HOA payment is not typically collected with your other payment. You see, your main monthly payment that you're going to have is your payment to the mortgage company, and that's going to be for your principal, interest, property taxes, and homeowners insurance. But it does not include an HOA, which means that if you are living in a property that has an HOA payment, you need to be able to get that set up directly with the HOA. This could vary in regards to how it's done. Sometimes you will get a welcome letter from the HOA immediately after closing. Sometimes it's done at closing, and sometimes it's even done right before. But in the end, you want to know how it works with that particular HOA that you are working with. The last property that we bought, I did not actually get my welcome letter till over a month after I bought the house. I had reached out to them actually about a week and a half after, because I was a little bit worried and wanted to make sure nothing was wrong. And they said, "Oh no, we're sending it to you. We'll get it to you next month." And I thought, okay. I took their word for it, and thankfully they were right. And they got me that HOA or that welcome letter that I was waiting for. But that was the particular HOA that we were buying in. Again, where you may be buying could be completely different. But either way, you want to make sure that you get that set up so that you don't possibly miss any HOA payments. And then our last and final step in all of this is actually the coolest one. It's time to party. It's time to have that housewarming party where I not only come over to your property with you, I'm kidding, unless you want to invite me, but you get to really just enjoy your new home with your family, with your friends, show people around and show them the new area that you are living in. So there you have it, my 22 steps for buying and using your VA loan in the smoothest and most simplest fashion. If there's anything that you think I missed here or want me to elaborate more on, let me know in the comments down below. And if there's other videos that you want to see me make that will help you as a veteran be able to successfully understand and use your VA home loan benefit, also let me know that down below in the comments. I appreciate your love and support in watching the channel. Don't forget to like and subscribe, and I'll see you in the next video.